This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet Microcap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet Microcap Podcast. I'm your host, Robert Kraft. Thank you all so much for the continued support and for tuning in. If you like what you hear on the Planet Microcap Podcast, please take a moment to rate us 5 stars on Spotify or Apple Podcasts. It really helps for more folks to discover the show and join the microcap investing community. Registration is now open for the Planet Microcap Showcase Toronto, happening October 21 through 23, 2025, in partnership with Microcap Club at the Arcadian Loft in downtown Toronto. Whether you're a seasoned investor or just getting started, you'll want to be there. Visit planetmicrocapshowcase.com to register, and I'll see you in Toronto. My guest on the show today is Mathieu Martin, portfolio manager at Rivemont MicroCap Fund. I've known Mathieu a long time, and he's a regular guest on the show. He's a generalist microcap investor who recently started exploring a sector many investors have written off entirely: Canadian cannabis. After years of avoiding the space due to its speculative excesses, Mathieu has been seeing the potential for a turnaround, with cleaner balance sheets, improving fundamentals, and profitable operators finally emerging. In this episode, we talk about what's changed in the Canadian cannabis landscape, from rationalized supply and reduced competition to international export markets and stronger brand differentiation. Mathieu shares how he uncovered opportunities like High Tide, why some vertically integrated players like Cannara Biotech and Rubicon Organics stand out, and how excise tax reform or expanded retail footprints could serve as powerful catalysts for the sector. We also dig into why most investors are still stuck on the legacy from the 2017-2019 bubble, 2017 to 2019 bubble, and what they're missing now. Mathieu explains the importance of reading cash flow statements over flashy revenue growth, highlights accounting red flags, and discusses how to navigate this highly regulated, capital-intensive market with discipline. If you've written off cannabis or simply haven't revisited the Canadian names in years, this conversation might change your mind. And for full disclosure, we discussed a number of companies on today's episode, and I'm not a shareholder in any of them. Thank you again for tuning into the Planet Microcap Podcast, and please enjoy my conversation with Mathieu Martin. Mathieu, thank you for joining me today. How you doing, man?
I'm doing well. Thanks, Bobby, for having me. I'm glad to be back on the podcast.
Absolutely, dude. Look, it's been a minute. You couldn't. Listen. We all got young families now, so I know you couldn't be there in Vegas, but now you're going to be there in Toronto. So I'm stoked to see you, man.
Yeah, I couldn't miss this one. It's going to be a great event. I'm really looking forward to it.
Heck yeah, no, for sure. So look, I'll cut right to it. Listen, we already kibitz for 20 minutes offline, so I'll get right to it here. Look. We've done a number of cannabis stuff on the pod for years, and there's times where it makes sense where, look, I'm never going to invite somebody on to talk cannabis when it's absolute, just in the doldrums, because why? Nobody really cares. Don't get me wrong. The contrarian side of me is kind of like, well, everybody hates it. We should do cannabis. But, usually we end up having somebody on when like things are kind of interesting, things are percolating. People are kind of looking at it a little differently right now. And I'd say, and this is specific to the Canadian cannabis space, not really in the US, because you're based in Montreal, you're focused mostly on the Canadian names. It's federally legal in Canada, so there's different regulatory hurdles that you don't have to worry about in Canada versus the US. So figured we'd do an update on, what's going on in the Canadian cannabis markets and what's happening there, because we've had a number of cannabis companies present at our events in the last 18 months that, are viewed by a number of fund managers as, premium growers and, seeing that they've gotten a lot of interest. They're optimizing their operations, stuff like that. So, kind of overview, 30,000 foot look. Mathieu, what are you seeing that amongst the Canadian cannabis, I guess, industry as a whole, and why it's becoming interesting, or why you've in particular been looking at it more closely?
Yeah, for sure. Well, maybe I can start with my own perspective on the industry. The the big boom in Canadian cannabis started, I think, about a year before legalization. So we had a big, massive bull market in cannabis stocks from, let's say, 2017 to 2019. And at that time, I'm not very fond of investing in if what I feel like fads or like things when things get a little bit too speculative. I tend to shy away from that. So I just looked at the industry back then, and I was like, this is crazy. This makes no sense. I'm never gonna touch it. So I didn't invest in the space for basically ever until last year, and I just didn't even look at any of those names. I follow the Canadian market very closely, but every time I saw a cannabis name, it was like I would discard it right away, like not interested at all. And then last year, my analyst who worked with me at Rivemont, he brought up a company called iTide, which we still own today. So iTide is
presenting in Toronto, by the way.
Yeah, that's great. I'm looking forward to meeting them. So iTide is the largest cannabis retailer in Canada, and basically he brought this idea to me. I was like, cannabis, like I'm not really interested. And he's like, no, but you should look at it, like the metrics make sense. It's they're growing, they're generating positive cash flows. It's they have a great moat in the industry, because what iTide did is they kind of copied the Costco model. So they sell a premium membership, and in exchange, the members get discounted prices on the cannabis, the cannabis and the accessories as well. So they are able to be the lowest cost retailer in the industry, and they can run their competitors out of business. So I was like, yeah, that makes sense. And like, if you look at it from a retail standpoint instead of a cannabis standpoint, then I can kind of wrap my head around it a bit more. And so we started buying a little bit of iTide initially in 2024. And then, I got a bit more curious about, starting to learn more about the industry and who are the main players, and then started following a few names. And it was earlier this year that I came across a few LPs, so more like on the cultivation side, that were growing pretty dramatically, growing 30-40% year over year, and they were profitable. And I was like, oh, okay, so a cannabis company can be growing and profitable. That's interesting, because those are the criteria I look for, and I'm pretty much industry agnostic except natural resources. So anything that has profits and is growing, I'm interested to learn more. So I started looking into more of these names, and that's when I came to the realization that the industry is starting to turn around after the bubble started deflating, I think, in 2019. So it's been 5 years of struggles for this industry. And now it feels like some of the upcoming winners are starting to emerge. So we can go down several rabbit holes from here, but that's kind of the overview of how I got interested in this space.
No, absolutely. Like, I mean, just staying on the high tide track, not high tide specifically, but that's an interesting starting point, because from there, the retail, that's usually kind of the final where, that's where all the flour or the hash, whatever, is being sold. So I can only imagine from there that you're like, all right, well, they're being low cost, like who's providing it, and who's doing it at scale and doing, with a high degree of quality assurance. So is that when you started going down the cultivator route and be like, all right, who are they getting their stuff from?
Yeah, exactly. Well, initially, because my goal is to invest in companies that have some form of competitive advantages, and iTide, I saw the moat based on their business model. They're the low cost provider in their industry. So I was like, okay, that makes sense. And I always thought that the cultivation side was more commoditized, cannabis flower, from one LP to the other, it's pretty much the same, and like there's no differentiation, there's no brand loyalty. But then when I started digging, I realized that there's a lot of difference in terms of quality of the flower. The THC levels, the flavor profile. I'm not a consumer, so it's hard for me to really understand that at a deep level. But I've done enough research now and spoke to enough people that I kind of understand the different value propositions. And also I think brand loyalty is starting to emerge now in the industry, and I can get into why maybe a bit later. But so then I started to understand what are the competitive advantages on the cultivation side, and that's when I identified a few players that I thought were more attractive than the others.
Absolutely. So what would you say are some of the main reasons why there's some of these tailwinds as well in the Canadian cannabis market? Obviously, we spoke federally legal, there was bull market, you mentioned all that. But is there anything specific to the time period right now, or maybe the last 18 months from when you first started looking at high tide to even now, that you're like, all right, I'm now starting to pick up on some of these tailwinds? You kind of hit on it, that there is real differentiation. There is, brand loyalty is starting to become more important. It seems like two of them, but is there any more?
Yeah, well, from an industry perspective, I think there are two important things to understand. The first one is the supply side. So most people, when they look at an industry or a company, they look at the demand side. So how much can they grow? How much demand is it for the product? In Canada, the cannabis market, it's about 5.5 billion. It's growing, mid-single digit. I think the demand picture is pretty clear. What people miss sometimes is the supply side, which, initially when there was the big boom, a lot of LPs raised, massive amounts of capital. They built massive cultivation facilities. And at some point, I don't recall the exact data point, but there was like several times more cultivation capacity than the market demand at the time. So it resulted in a big oversupply problem, and it drove wholesale prices down by a lot. So when the regulatory framework was established in Canada, the regulators, the way they structured the excise tax, it's like they planned that cannabis would sell for about $10 a gram, and prices went down to about $3 to $4 a gram. So the excise tax, which was supposed to be about 10% of a $10 per gram selling price, since it was a fixed price, it's $1 a gram. When the wholesale prices went down, the excise tax became 25-30%. So it's essentially a royalty on the top line sales. 30-40% will go directly to the government before any COGS or anything like that. So it's extremely punitive. So that drove a lot of supply out of the market over the last 5 years. I saw a data point a few months ago that there were over 60 bankruptcies in the Canadian cannabis market over the last 3 to 4 years. So several players have exited the space, and so that rationalized the supply side of the equation. So now I think the supply side is fairly appropriate for the current demand. And the other thing that's also happening that started last year is that a few international markets opened up, namely Germany, Israel, Australia. There are a few more. So they need to import a lot of cannabis because they don't have domestic cultivation capacity. So they import a lot from Canada. Actually, Canada is the biggest worldwide exporter of cannabis. So, again, just to go back to the excise tax, which is very punitive in Canada, when these licensed producers sell internationally, they don't pay the excise tax. So the international sales in other medical markets are way more profitable than selling domestically in Canada. So a lot of LPs have started to pivot away from Canada and start selling everything internationally. So now you can see like two different strategies. You have some LPs are doubling down on the Canadian market, and some are just taking their products off the shelves and selling everything internationally. So that's removing supply from the Canadian market. And by a lot of estimates, this is anecdotal, but when I speak to CEOs, like there's a consensus that right now the Canadian market is undersupplied given all those dynamics. So that's making the wholesale prices start to increase again after several years of declines. So that's why I think it's interesting to look at the space right now, because there's no more supplies coming in the market right now. Like nobody cares, nobody's financing new cultivation facilities, and the prices are going up. So the producers that are in business right now, I think, have a lot of leverage
Yeah,
on their fixed costs.
geez, to say the least. I mean, you look at like a Cannara Biotech where they were able to take up what was it? I think it was the Green Dutchman, the cultivation facility. They were able to buy it for basically pennies on the dollar. I mean, you almost kind of feel bad for some of the ones from that 2017, 2019 time where, they were like, all right, let's get after it. Federally legal. Let's, build as much cultivation facilities as we can. But also at the same time, it seemed like from what I recall from those interviews at the time and talking to some of the companies is that there wasn't really it all comes down to quality and quality assurance in a lot of these massive grow facilities. And it seemed like a lot of them just maybe didn't have that as locked in as maybe they were publicly saying, supply side or not. It's just, it seemed like that was also a problem where now it seems like, each new cultivation company I talked to, we've interviewed Rubicon Organics, a bunch, and obviously Cannara Biotech's not going to be presenting in Toronto. It's really all about quality assurance.
Quality,
Like that might
yeah.
be the first word that they say before anything. When it comes to even their capacity, it's like we are quality. That's our focus, and then we talk how we scale that.
Yeah, exactly. It's quality and it's consistency. You don't want to sell a product where, one day I smoke some cannabis and I get this kind of eye, and the next day I smoke the same thing and the eye is completely different, maybe more or less. Customers don't like that, so they want the same consistent effect every time that they smoke the same product. And yeah, I think in general the industry has been plagued by inconsistency issues. So the brands that are emerging today, I think, are built on quality and consistency,
Absolutely.
and they drive repeat purchases because of that.
Absolutely. And for full disclosure, I'm not a shareholder in any of the names that we mentioned thus far, but Rubicon and Cannara and High Tide will be presenting at our event in Toronto, October 21 through 23. Shameless plug.
And I'm a shareholder of the tree.
Okay, there you go. His basket of
Yeah.
Canadian cannabis companies. I mean, what? Obviously, there's. I mean, it's still being slightly overlooked, I would argue, right, in some circles. I think amongst kind of the core microcap folks, they're really taking a closer look. Like you've talked about it, Small Cap Discoveries has talked about it a little bit here. What are some of the things though that are still plaguing the industry? We had one company that had some issues earlier this year, and I won't name the name. Everybody probably is listening and knows it. But what what are some of the things that are still plaguing the industry right now that might be different from some of the boom and bust times in like 2014 and the bubble in 2017 to 2019? Like what's different now in terms of the uh I guess you'd say the malfeasance. I don't know.
Yeah.
Man, that's a
Yeah,
good one. That's
well,
a good word.
yeah, well, it's, I mean, I think in any industry there are some bad apples. Maybe there were a bit more in the cannabis industry than others, but at the end of the day, like I'm seeing bad things happen in microcaps all over the place. So I don't think it's specific. It's a specific issue to cannabis. But I think the main misunderstanding when I talk to people about cannabis these days, most people their first thought is, they think of Canopy Growth, they think of Aurora, they think of Tilray, like the big LPs, which I'm not shareholder in any of those, but these were the big LPs in the boom days that got billion-dollar valuations. Even Canopy, I think, went up to $20 billion valuation. Uh, these companies, for the most part, they still struggle to make a profit. Most of them. Aurora is profitable now because they pivoted away from the Canadian recreational market, and they're now selling into medical markets and internationally. But they're all losing market share in the Canadian recreational market right now. So most people their first thought about the space is these guys that are still struggling, they're still unprofitable, they have a lot of debt, they're losing market share. They don't realize that there are some emerging players like Cannara, like Rubicon, like a few others as well that are gaining market share, that are growing revenues, that are doing it profitably, that are producing, quality products, and have some competitive advantages. So I think that's what most people miss. And at some point, I feel like it will be impossible to ignore the fundamentals if these companies keep executing like they have. Uh, it's like the cash flows will speak for themselves, and I love it right now because this misperception is creating the kind of opportunities that I can find where a Canara, for example, it's trading based on my 2025 forecast, it's trading at about 8 times free cash flow, and it's growing 30% plus year over year. I mean, it's very hard to find companies like that at this valuation with these kinds of metrics. So yeah, I love the inefficiency here, but at some point, I certainly hope that people will realize that this is unjustified. These low valuations.
Absolutely. Do you sometimes think put into, or not sometimes, like when you're thinking about, your basket and, your thesis around Canadian cannabis, whether it's cultivators or retail right now, or even maybe some consumer good products, do you try and forecast what the cyclicality of it looks like? With all these commoditized type businesses, I know once you dug in, you're starting to see kind of the differentiating factors in terms of quality of grow and the operational efficiencies and stuff like that. But at the end of the day, it is still commoditized. It is, another brand can come in, or another retail type chain can come in, do something similar with membership and make it even lower and just ruin that. So how do you think about the cyclicality once people start kind of catching on that, you know, cannabis is a place where you can go and make money that
Yeah.
others are right now?
Yeah, well, it's I think the main barrier but there are two main barriers to entry in my opinion. The first one, it's highly regulated. So but I mean, every commodity industry is different, but some I think have less regulatory barriers than cannabis has. So it's not easy to say like tomorrow I have capital and I want to open a new cultivation space. You have to go through all the regulatory process. You have to establish the distributor relationship and everything. It's a complicated process. I think it's at least a couple of years. And then the other barrier is capital. You need to build these big greenhouses, especially if you want to be competitive. I think you need some scale because there are now some scale players that are profitable and that will defend their turf. So you need to invest a lot of capital to get started, and right now no capital is going into this industry because of all the market dynamics that I highlighted before. So it's not to say that supply will not ever increase again. It will if the economics are great, but there will be a lag, and the lag, in my opinion, is going to be a few years, not a few months. So I think this thesis is still very, very early stage, and has plenty of time to play out before anybody really realizes.
Absolutely. Are you also looking at consumables too right now? I mean, is that interesting at all, or is it really? Are you really more focused on like cultivators and I mean, High Tide. I don't know if you're necessarily looking for retail, but that was the original instigator for all of this. But are you also looking at some of these consumable names that are trying to build up a brand and sell to all these different retail shops?
Yeah, well, actually, like the Rubicon and Cannara, for example, they are. But I mean, Cannara is fully vertically integrated, so they do the cultivation, they do the processing, the packaging. They have their own in-house brands, and they have the distributor relationship. So the only thing they don't do is the retailing. And Rubicon is also fairly vertically integrated. They outsource a little bit of the processing, but they recently raised capital, and they're gonna internalize some of the like pre-roll automation and that kind of stuff. So for the most part, I would say, yeah, vertical integration is important. Again, everyone has a different strategy. Like, I'm aware of, like, I spoke to an LP on, it's a private company. They only do cultivation, like premium high quality cultivation, and they sell to other brands. So that's their business model. I think they're doing well with it. But from my perspective, yeah, I like the vertical integration.
Got it. Yeah. So like individual, like, I know there's like some hash consumable stuff. I don't even know if it's like, is there a shroom? I know we're talking cannabis, but shrooms is always kind of lumped in with it a little bit. I mean, is that still a thing right now, or is that kind of
I'm not. I haven't really looked into that, so yeah, I'm not aware.
gotcha.
Yeah,
All right,
yeah,
no worries. We'll leave it at
yeah.
that. I mean, I guess we kind of covered a bit already. It's still, I mean, it's just based on what you're telling me, it's still very early innings. It sounds like in the thesis. I mean, is there any kind of upcoming catalyst that you think could result in, this thesis, maturing faster? Or do you think it'll still take some time for folks to realize like, oh, there's value here?
Yeah, well, it's hard to pinpoint exactly. I mean, at the industry level, there are a few catalysts to expand the market. So, for example, the THC limits on edibles, like the gummies, are fairly low in Canada. So a lot of people think that if the government increases the THC limit, more people would buy gummies, and then it would expand the market. Uh, if the government decides to reduce the excise tax, that would probably be a positive for the industry, because all those LPs would become more profitable. Then Quebec specifically, because every province is different, and what's unique about Quebec is that the retail market is managed by the government. It's a government entity that owns the retail shops in Quebec specifically. The rest of Canada, it's private operators like High Tide, and Quebec right now is very underpenetrated. So we have the number of stores per capita in Quebec. I think it's 10 times lower than the rest of Canada. So the provincial body that's in charge of the cannabis operations, they're opening new stores and they're expanding, but at a very slow pace. So as they keep expanding the store footprint, it's gonna increase the market as well. Because Quebec right now, I think it's a little over 10% of the total Canadian cannabis market, and by some estimates, it could be double the size if there was the right store footprint. So that would be a pretty significant boost to the overall market. So those are industry-specific catalysts that could improve the fundamentals. If you look at from a capital market standpoint, like how do people realize that this opportunity is there? It's unclear to me at this point. I would say the most probable catalyst would be you start to see some M&A, like we saw in microcaps broadly in 2023 and 2024. I think that woke people up to like, okay, these small SaaS companies are getting bought out for 50% premiums or 100% premiums. If you start to see some strategics starting to acquire or take big stakes in Canadian cannabis names, like maybe a tobacco company or an alcohol company, I think that's gonna, it's gonna be harder and harder for people to ignore the space, because you'll see some capital flows directly into these companies. So that could be a catalyst. Other than that, I think just some of the legacy LPs may be going out of business or just exiting the market, and the fundamentals of those who are winning right now, if they keep winning, I think their fundamentals are going to be impossible to ignore at some point.
Got it. One last question on the cannabis side, and then yeah, listen, I wasn't even going to ask you about the M&A, hot. I think that was the last time we had you on the pod, was talking about that. Yeah, that was the last time we had you. One last question on the Canadian cannabis front, and then I want to actually follow up with you on one thing that you just brought up on the M&A activity. That was the last time I think we had you on the podcast, and talking about that in general. But how do you think about the input of consumption rates, amongst adult use, whoever can legally obviously use it, and what they can, track? I mean, how does that input affect your thesis at all? Whether it's remaining flat, it's increasing, you've seen a decrease. Like, how do you think about consumption rates?
Yeah, well, it's. I mean, there's some data available from. There are a few data providers in Canada. You can get all sorts of data on which products are selling more than others at the retail level, and then the total size of the market. Is it growing? Is it shrinking? Overall, the market has grown since legalization. It's grown, I believe, pretty much every year. It's like what's been happening. Like cannabis was always a market. It was just illegal before. So what we've seen is a transition from the illegal market to the legal market. And this transition is ongoing as you get more stores, more accessibility. Maybe like new people will start to consume a little bit more, or will try. But for the most part, I would say it's a transition from illegal to legal. Right now, I think the last estimates I've seen is, it's about the legal market is now about 75 to 80% of the total cannabis market in Canada. So there's still, a little bit that can still transition over, but for the most part, it's like the bulk has transitioned already. I don't think it's a market that's going away. I think it's fairly recession resistant. I view it as similar to tobacco and alcohol. I think it's gonna be something that people keep consuming, even though maybe even if the economy is bad. So yeah, I don't have a strong view on like where consumption is going, but I don't think it's going away. I think it will keep growing at mid-single digit probably.
Okay. Yeah, no, look, we'll keep monitoring it. I'm just curious. I look, maybe it's just as we're getting older, you just feel like more of our cohort are, just stopping using, and not, consumption rates go down like as we get older, I feel like, or at least amongst our crew. Maybe, listen,
Yeah.
we also live in a bubble. No,
maybe, but also one trend that I think is fairly well known, since a few years, is that alcohol consumption is going down.
Yeah.
Like the younger generation is drinking much less alcohol. Um, I'm not sure if this is benefiting cannabis. Like, I'm not sure if people consume more cannabis because they drink less, but might be a bit of a tailwind. I'm not sure. Yeah.
I did a quick chat GPT as we were talking here, and I was just curious about like the Canadian versus US consumption rates, and the key takeaways on for the last 5 years from that was in Canada, higher overall, or just again, I'm citing chat GPT here. You know, you can look it up yourself. Don't take me as a direct expert source or anything, but their key takeaways were that in Canada, it's a higher overall prevalence, but relatively moderate day to day intensity among users versus the USA, where it's a lower total user share, but among users, heavier intensity, a much larger share used daily or near daily.
Interesting.
All right.
Good to know.
Good to know. Thanks, ChatGPT. Another question I have, and just this will be the official close on this part of the conversation is, as folks maybe that are starting to see some of the same things that you are, putting their own thesis together when they're looking at kind of the Canadian cannabis basket as a whole and seeing the opportunity. What are some red flags that you would advise others or share with others to look out for as they're starting to dig deeper into some of these companies?
Well, for me, the best protection typically is investing in companies that are profitable and have a good balance sheet. I think you avoid a lot of risks if you invest that way. So that's where I started. And actually, if you look at companies that are growing profitable with a decent balance sheet in Canadian cannabis, there aren't that many. And we name, I think, most of them on this podcast. So that's where I started and where I got interested. Uh, Other than that, I would say, look at the cash flow statement, because we had one example, and I can name them. You alluded to it earlier. Simply Solventless Concentrate, which I don't own right now. Um, they made several acquisitions over the last couple of years, and they shared some forward-looking guidance and run rate numbers, taking into account some of the acquisitions they had recently done. And when they published financials, they had, growing revenues, they had profitability, net income profitability, but the cash flows were consistently negative. If you look at operating cash flows, and that was due to their inventory that was increasing every quarter. So they would record revenues and show profits, but then in the cash flow statements, it's just inventory increasing, and they're still losing money on the cash flow line. So that was a big red flag to me, and it was part of the reason why I sold my position earlier this year. And then, unfortunately for shareholders, the company had its year-end audit, which was delayed because of some issues that the auditors were pushing back on. And I think, it came to light that one of those issues was that, they were maybe using some aggressive accounting for their inventory and the way they record their revenues. So oh, maybe it's not necessary to get into the details, but they had some tolling revenues that they were paid in cannabis products and biomass instead of actual cash. So they would record it as revenue and put it in inventory, and they were perhaps inflating a little bit the value, at least in the view of auditors. And so the auditors had them basically take some make some pretty significant adjustments in their Q4, which the result was, revenues were significantly lower and they were not profitable instead of net income profitable. So looking at the cash flows and the inventory, I think is pretty important when you look at these companies, and maybe just like having maybe a year or two of audited financials that are clean, and the auditors looked at it and they they approve the methodologies that are used, I think is important as well.
I mean, that's great advice. Yeah, no, I know a lot of people are following that name for sure. So that's good to give some perspective on, what happened there as well. So final question, like I said, last time we had you on here, we were talking about M&A just in general, like Canada was red hot. Where are we at now? I mean, it's kind of seems like it's slowed down a little bit. I mean, you're pretty on it. You always post whenever there's a take private transaction or something like that. So, what have you seen in terms of frequency thus far in 2025? Is it still as hot as it was in 23, 24? What are you seeing?
Yeah, it's not as hot as it used to. There are still some takeouts, but I'm seeing a few every month, like maybe one, two, three every month. During at some points during 2024, I think we saw 5, 6, 7, 8 transactions per month. It was crazy. Like there was one or two every week.
It's insane.
Yeah, it was insane. And for us in the fund, we had four. Like typically, I own 15 to 20 names in the fund, and we had 4 takeouts in our portfolio in 2024. So it was a big. It created a big hole in the portfolio that I had cash that I needed to redeploy. And what's annoying is that I like to think that I own some of the higher quality names in the Canadian microcap space. So now they're out of the investable universe for me as they go private. So it's hard to replace these opportunities in my portfolio. It's hard to find the same level of quality. The pool has shrunk. There are less quality opportunities right now. So that's been a challenge. But on the flip side, that created this big tailwind of like people realizing that valuations are cheap and a lot of stocks re-rated to better valuations. So they didn't have to get taken private. They could keep going as a public company with a better valuation. So I think now we're seeing a more normalized environment where there are still opportunities that there always will be, but not the whole space is not as discounted as it was. So buyers are less aggressive, I think, these days.
But I also wonder if, some of the banks now are just seeing their deal flow go up because some of these companies are like, well, yeah, it was a very inquisitive environment, in the last 18 months. But, I think there was quite a few of those names that I think we were all kind of shocked
Yeah.
that ended up getting taken out when, they probably, they looked at the environment, they saw that there wasn't a lot of deals to be had, or raising capital wasn't as the inflows of capital to you know just raise capital basically were not as robust as maybe as they are now, a little bit more.
Yeah. Well,
I
when the
wonder.
valuations were low, I mean, it clearly wasn't attractive for most microcaps to raise capital. So the funding environment was very dry. And I think the other dynamic that was happening back then, which might have improved since, is you had this big and quick rise in interest rates. So the private equity buyers were sitting on a lot of capital to deploy, and with interest rates rising, it was creating a bit of uncertainty at a macro level, and also higher borrowing costs because they typically finance these deals with a lot of debt. So I think the private equity buyers were refraining at the time from making large deals, and instead they turned to let's look at smaller opportunities, and that's why they identified Canadian microcaps as ripe for M&A transactions.
Well, that also, I mean, would you also attribute, some of the, maybe slowdown was in, I mean, I've been seeing a lot more of these, what's it called? The life financings in Canada. Would you say that's maybe had a hand in, maybe some of these companies thinking, all right, well, maybe we don't want to, just look to be acquired right now because if we need capital to grow, like we can just do. Tell me what life financing is. Somebody just told me, and I'm of course blanking on
Yeah,
it.
so the life financing, I'm not a lawyer, so I can't go into all the technicalities of it, but basically it's a new exemption that allows microcap companies to raise capital. It's a bit easier because before you either file the prospectus, which is a big document highlighting all the business strategy and risk and all that stuff. It's very costly to write up a prospectus. So it was very cost prohibitive for very small issuers to do the prospectus and raise capital that way. So they had to rely on private placements with accredited investors, and the private placements are locked up for 4 months for the investors who buy the shares. So the companies had to provide a bigger discount to the market price. They had to add some warrants to entice people to buy these offerings. The life financing is like it's a bit of an in between. The companies still have to file a document highlighting some of the use of proceeds and all that stuff, but way um, there are way less requirements than a prospectus. It's way less costly, and the offerings are freely tradable on day one. So it's more appealing to share for prospective investors to buy these offerings. So it's clearly, I'm seeing a lot more life offerings these days. I think it's a great initiative by the regulators, and it's allowing it basically it's lowering the cost of capital for microcap companies.
That's huge. No, it's
Yeah.
absolutely huge. Do you think they're gonna raise the minimum that they can raise? Because what is it right now? It's only up to 5 million.
Yeah, I don't know if there are plans to change it for now. I mean, hopefully it's a start, and if it goes well, they can maybe loosen up a little bit the limitations of it. But yeah, I think it's a great first step. It's a step in the right direction.
Absolutely. All right. So, I mean, look, we covered a lot here, Matthew. I mean, obviously, you'll probably be on another 4 times this year. No, just kidding. Well, maybe I don't know. It's depending on what's going on. I mean, who knows? We might have another crazy cannabis thing. You're probably the cannabis guy. I mean, how many invites have you gotten to be on a number of cannabis podcasts now? But look, I mean, is there anything else we've missed or that's been you've been finding interesting in microcap land right now that you've been jamming on? Anything else before we?
Well, just to go back to your last point, I think it's funny that I'm the cannabis expert in Canada right now because and that's what I love about investing in microcaps. Like I'm a generalist, and I don't want anybody to think that I'm all in on cannabis right now. That's not the case. It's about 15 to 20% of my funds portfolio right now. So it's a decent size allocation to the names we talked about today. But it's not like I'm by no way am I all in on the space. But so I'm a generalist. I look at a lot of industries, but when I find something and I start digging, I can quickly become the expert because like nobody cares, like nobody's looking at these names anymore. Like it's like the microcap market is so inefficient in some specific pockets at some specific times for specific reasons. And that's what I love about it. So yeah, I guess I'm the cannabis expert now.
No, for sure. Well, what's funny is like, listen, if I was producing one of those like industry specific podcasts, like you would be like the main person I'd want to have on because, that's their dream. Like, you sometimes you're talking into, your own ecosystem when you have, whether it's like crypto, you have crypto maxis on all the time or cannabis maxis or resources, whatever. It's the best when you have a generalist on that now is coming to talk about, well, here's why I think it's interesting because that then appeals to a more broader audience of like, all right, well, if this generalist is looking at it like that makes that caused me to maybe at least take a look and see what's going on,
Yeah.
versus versus just a bunch of folks that, with all due respect, everybody has their thing, and it's a good. We need experts in every one of these places, but sometimes you hear like, crypto, you're just, all right, I don't know.
Yeah, well, the thing is, like, if you're an expert on crypto, like, you kind of have to be the expert regardless of how the market is going. Like, the market is going down, you're still like cheering for the market, and so people are biased. In my case, it's like right now, I think cannabis is interesting. I've done a deep dive on it. I like it. I talk about it. But at some point, hopefully the thesis plays out according to plan, and then I'll probably move on at some point, and then I'll find something else, and I'll become the expert in something else in a few years. So I'm not married to the industry, but yeah, I like it right now. And also, I think what's fascinating is that just by speaking about it publicly, on social media, and I have my newsletter, Stocks and Stones, on Substack, which I write a weekly post, and I speak about cannabis pretty often. I become like this like center of attention, so the information gravitates towards me without me doing anything. Like, people reach out to me and they give me information, and the companies are willing to talk to me as well. So it becomes like a positive flywheel of like, the more I talk about it, the more I become an expert about it, because the information flows through me. So I think that's pretty fascinating.
No, 100%. Cool. All right. Well, we'll leave it there. Matthew, where can our audience go and subscribe to your newsletter as well as follow you on social media?
Yeah, so I'm the newsletter is called Stocks and Stones. It's on Substack. I'm also Stocks_Stones on X, and my name on LinkedIn. These are the three main places where I'm active.
Beautiful. Awesome. Well, Matthew, thank you so much for joining me today. I really do appreciate it. Good luck. Stay safe, and I'll see you in Toronto.
Yeah, I'm looking forward to it. Thanks for having me, Bobby.
Thank you.